Let's take a look at the firms that are interested in this sector and how do they identify the ones that they believe will be winners versus losers? If you can kind of just take us through a couple of scenarios that way.
Well, yours for one,
Mhm.
Al, right? With M2i, we're very excited about what you all are doing on the supply chain transparency and shoring up the depot,
Mhm.
the storage for America. And thank you for what you're doing, and thank you for all the service that you've done as well. But the main thing we think is, as an investor, you're always trying to get ahead of a trend. You're
Mhm.
trying to identify something earlier, right?
Mhm.
Than the rest of Wall Street, which is really hard to do. But the government is trying to play to the trends, not guess the trends, right?
Right.
So if I'm playing to a trend, that means that I know that, let's just take a few different ones. So let's say I'm looking at tungsten
Mhm.
because I need tungsten for my missiles and my rockets and my armor, my bullets, etc. So I know that there's only really one major tungsten mine as a government outside of China control that's in Allied control, which is the Sangdong mine in South Korea.
Mhm.
That's all I got. So I better protect that and put incentives into the market. And anybody that's really focusing as a public company into that market, I better make sure they don't fail.
Mhm.
Right. And
Mhm.
so I'm going to support them. Anybody that's pulling copper for the electrification of America, right? That's happening all across the board. Anybody that's doing black mass and everything that goes into black mass, your nickel, your cobalt, your manganese, your lithium, and others, right? So all of those critical supply needs that we have and the rest of the world has that is so dominated by China, it's the right thing for the government to not just give NOFOs. Of course, we need that for broad-based participation in creating more refineries, more supply chain channels, more processing, more recycling, because there's only going to be so much in the ground you can take out of
Right.
20 years from now, 30 years ago for our children and our grandchildren.
Right.
So you need the recycling efforts as well. So it's the right thing to both have the NOFOs at the top end for broad-based participation by many companies, but the direct investments on the bottom end to prioritized companies that are public that they can support, grow faster, and really get them to enhance the supply, the storage, the use of those different critical minerals that are so in demand and we have so much of a small access to because China's dominated it.
So as we're looking at everything that we've looked at, the landscape that we've discussed, what would be some of the key points that you would want to make sure that are kind of the memorable pieces to take away from our dialogue?
So first, if I would leave the audience with this: one, stop treating private capital formation as a later stage activity, and reduce. I'm not saying eliminate. I'm just saying reduce the dependence on government incentives.
Right.
Plan for that non-dilutive capital as a secondary and nice to have
Hmm.
capital rather than a dependence to your financial model. Secondly, develop projects as integrated supply chain assets. The winners will not simply mine their materials. They're going to process, refine, connect directly into that whole strategic manufacturing ecosystem. Build your business as an integrated supply chain from the beginning.
Right.
And then lastly, I would just build an institutional grade transparency. Right? The energy transition and the national security that we talked about,
Hmm.
all those objectives, they're going to require trillions of dollars of investment. That capital will only flow when projects provide the transparency, governance, and execution discipline that we talked about, which investors expect. They're not looking for it anymore. They expect it.
Right.
And they don't see it, you're gone. The critical minerals industry has an extraordinary opportunity today. It is not a better time. I got to tell you this, probably since the 40s and 50s for critical minerals and rare earths. Demand fundamentals are strong. Government support is strong and continues to get stronger and growing. strategic necessity has never been more clear, ever, for us to focus on this area. So the question is no longer whether these projects need to be built. The question is whether we can organize capital efficiently enough to build hundreds of them. That's the big question.
That's awesome. Michael, thanks for your time and also the investment and time it took for you to prepare for our session today. You've contributed an awful lot of information for us to really digest. So thanks again for your time.
My pleasure. It's been great being on the show with you. We love what you're doing, Al. Thank you for continuing this podcast in many different sectors and different areas that are important for the investment community, and most especially for this industry. Thank you for having me on.
My pleasure. Thanks again. And to everyone who listened or watched this episode, thank you for joining us. Be sure to follow us on Spotify and Apple Podcasts to keep enjoying the Minerals and Metals Initiative.